Yo, 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 yo. This is the first video on the YouTube channel. On this YouTube channel, we will offer a couple of things. We would like to share the journey that we are going through and share our thoughts and our logs and the way that we approach as a trader towards the market. So the things that it will involve are live trades that are recorded, that are sampled, and that you can see how we manage the trades. It will be considered of weekly outlooks where we point out what we think that will happen for the week. It will be small outlooks for the day, so forecastings. It will be journaling of the trades. It will be trade recaps. So what did I do with the trade? How did I engage in the trade? Is it according to my plan, against my plan? What are the results that came along with it? And as last, we'll do some trade weekly reviews. The information that will be shared in here is all learned and taught by the Inner Circle Trader, ICT. You can follow him on all socials, you can follow him on Twitter, you can follow him on YouTube. He has a great deal on free content that he shared. So if you're not familiar with the words that are used in here, you can go and check him out to learn the grammar that is used on this YouTube channel. If there are any questions regarding to the way that we speak or the theory that we use, we would recommend to first check all the videos that he has on his channel, and otherwise you can always ask us in the comment section below. We will try to do our best to help you as best as we can. It's not like we are already pro traders, but we are traders that are within the journey, struggling some weeks, having nice weeks the other weeks, but we like to be as transparent as possible and just show what it means to be a trader, the effort that comes along with it, the beautiful things that come along with it, but also the headaches and the pain that it can involve. Whenever we start a week, because this session will be a weekly outlook, it will be the week of the 24th of April. And before we start a week, we always have to check out the news calendar. Which calendar you use is up to you. Personally, I use Forex Factory. And as you can see, the only two news events that are shown at here are the dollar and the euro. And it is because I only trade S&P, the euro dollar, and that's it. That are my main pairs. I use other pairs for correlation, so I can be using the pound for the correlation to the euro. I can use euro pound for correlation to check whether the pound or the euro is stronger, so the euro might come in a consolidation. I check Nasdaq and the Dow for the correlation with S&P. And the dollar, of course, is used as a benchmark for all the pairs that are traded. So what we can see over here is that there was barely news on Monday today. It's Monday today. There was at 4 o'clock, there was a little bit of news, orange folder. And for the rest of the week, it can be a pretty heavy week. Tomorrow we have at 10 o'clock in Holland. So that is a 6-hour difference with New York. We live 6 hours before. So 10 o'clock in the morning in Holland means 4 o'clock in the night in New York. So make your own calculations what it is in your own time zone for all the times that are shown over here. And I would recommend to open the Forex calendar yourself. What we can see is expected that we can have some heaviness in the morning tomorrow. I'm sorry, I can see it's still on the American time zone, so I was lying. It's not in Dutch yet. So that means the 10 o'clock that we saw on the dollar means it is at 4 p.m. in my country. So what we can see here, the calendar is shown correct. We can see we have some red and orange news tomorrow at 4 o'clock. We have some 2:30 news, orange, and Wednesday. And at Thursday and Friday we have news as well. That means we can have a volatile week the whole week. And especially in the New York sessions we can expect something. The way I approach the news is that I will trade way before or after the news. That means for tomorrow I will be looking into the market at London Open. And if I can't spot anything in London Open, I will look at London Close after 4 p.m. I don't like to get into the market before the news is coming out. Because in my opinion it's not needed. Alright, let's dive into the chart and let's see what I expect for the coming week. We can see the daily on the DXY over here. What we can see is we created an order block and we traded last week back into the order block. This is Monday of last week and this is the Monday of the new week. And we have been consolidating whole week within this order block that should give us downward momentum towards the sell side liquidity if we want to stay bearish. We have a volume imbalance that we have been consolidating in and we have broken out today. I would like to see that we keep our bearishness. We might see some return towards this volume imbalance and then I would like to see us dive deeper. The second option is that we just dive deeper from the open and we keep on trading lower. On the 1 hour, on the dollar, we can see that we are approaching some levels of support. Today we have taken out previous week low. We have not reacted from it. We only used it to mitigate again from an order block and mitigate again from an order block and push lower. So we are approaching now our first level of discount fair value gap and a second level of discounted fair value gap below. My expectation is that we could dive deeper overnight into this fair value gap, then see some support from here. I would like to see us sweep some highs, and when we get a displacement lower, I will try to attack further sell side to get towards this fair value gap. This is the first draw on liquidity that I'm eyeing right now. If I look to the above side, we can see we took out some buy side liquidity here, shown displacement, had a retracement here, shown displacement, a fair value gap that has been filled over here, and from there we have another displacement. So right here we are balanced at this moment. I don't see any reason to get back into these zones right away. So I would like to see us stay bearish for now. Alright, let's go to the euro dollar. It's of course the pair that is close connected towards the dollar. We can see here the same type of environment as we can see on the dollar itself. We are heavily bullish on this pair. We can see that the order flow respects the bullish side constantly. So every bullish order block that we approach, we come back in it here, come back in here again, and we have a displacement. We have a retracement, consolidate, and the start of this week we shown another displacement. So the first level of buy side liquidity that we can see is the buy side liquidity of not last Friday, but the Friday before. So that is what I'm eyeing for this week. It means everything towards that first buy side liquidity. The weekly first draw on liquidity is high probability, and I will try to engage to get into the market towards that buy side liquidity. When we go to the 1 hour, I see two options for tomorrow. As I said, it's depending upon how the dollar will trade. If we get some bullishness overnight and we get above this 1 hour fair value gap, I will expect this fair value gap to be used as a support level and it could trade us higher. If we will see some reaction from the fair value gap on the dollar, the first level of support dollar that we called, so this one right here, then we can get a dive a little bit deeper into another fair value gap over here on Euro USD, and I would like to see it trade higher from there. Here is the same rule. I would like to see some level of sell side liquidity being swept, and after the swap has happened, I would like to see a displacement to the other side, and then I will attack the buy side liquidity. Like I said before, everything towards this structure high is high probability for me. Afterwards, we could see us trade back into this volume imbalance. That is the longer term narrative and the longer term draw on liquidity for me. That is about 80 pips towards the first target and 230 pips to reach the terminus of that volume imbalance. I'm not saying we will reach that this week, but it is something I am eyeing, and like always, you have to take it step by step and try to determine what is your high probability draw on liquidity, hunt that, and after that has been taken out, get to the sidelines and wait for high probability again. It's not about quantity, it's about quality within trading and the patience that you can bring onto yourself in periods of less probability. Alright, let's go to S&P. S&P is of course within trading hours still, so we can also do a little bit of an expectation for the PM session still, depending on how late this will be uploaded. I don't know if you can do anything with it, but let's at least do some analysis. Alright, looking at the daily, we traded off this daily fair value gap, the consequent encroachment. Consequent encroachment is 50% level, so the mid level of this fair value gap. Alright, the charger has been plugged in, so no worries, we're safe again. So we traded off this fair value gap consequent encroachment, and we had a displacement to the upside. Didn't take out this swing high yet. We took out this swing high, and after we did, we had a retracement lower. To which point did we retrace? We retraced back within the old consolidation before the displacement. What is something we can expect after consolidation is another displacement. Since we are in a bullish environment, just below this buy side liquidity, I'm expecting the easiest draw on liquidity to target first as my high probability setup for the week. So with the evidence I have right now, the thing I'm expecting is us to draw towards this buy side liquidity. If we are losing the fair value gap right over here, I'm expecting us to dive with it towards this imbalance or towards this imbalance. But for now, that is not the case, and it's not something I'm actively looking at. Looking at the 1 hour, we can see we took out previous week low today, and we had a displacement higher, breaking this high. The things that are still open is this buy side liquidity here, the relative equal highs, this buy side liquidity or order block here, and the previous week high over there. We traded also back in this 1 hour fair value gap and our last structure low before the displacement higher that took out this high. After we took out the high, we could see that we had a quick shift lower, trading back to a discount, and after we went to a discount, we traded up again. So for PM session, I'm still bullish right now. I'm expecting we could see a deeper retracement within this range, and then we could target this buy side liquidity. So when we're looking at the 15 minutes, I can see we have a fair value gap still open over here, and let's see how that looks on the 5 minute. The 5 minute we can make it a little bit shorter, and we can see we had a heavy displacement here in level of distribution. First time buying, another level of distribution, second time buying, a displacement into a discount order block, and from there on we had a displacement to the upside, breaking one short-term high, the second levels of short-term high, and we have still this void open here. So what I'm expecting for PM is to take out this short-term low, get back into the fair value gap, and then dive towards this void and maybe even target the buy side liquidity again. Depends on how it will trade towards this fair value gap, whether I will take it or not. Personally, I always like to see it trade with multiple levels. So trade low, create some more liquidity here, and then break lower with a stop hunt. It could be added with some extra nice confluence if we get a divergence with the Nasdaq or the Dow, meaning that, for example, we take out a low on S&P and we're not taking out a low on Nasdaq or the Dow, or vice versa. That is a divergence, and means a crack in correlation. For now, this is the weekly outlook. So the thing I'm looking at is a bearish dollar for the week so far, from what I'm seeing now, and meaning foreign currency to go up. Let's write it down. Bearish dollar, meaning XXX USD is going up and USD XXX is going down. This is the thing I'm looking at for the week, and happy trading, good luck with your trading, and trade safe. The thing I want to add is, all being said right here is no financial advice. Everything to do is recommended on a demo, and trade safe and be conscious with your actions.